Todd Harrison with CB1 Capital. Todd, how are you today?
Hey, James.
What's going on down there?
Not too much. It's Monday. The sun's out, so you got that going for us. Markets are up. That's good, too.
Yeah, well, actually, the weather's risen above zero and the wind has stopped howling. So, going to stick around, maybe go outside even. Todd, what's going on in U.S. capital cannabis markets? I think the main thing that has kind of given everybody pause here is Owen Bennett's at Jefferies downgrading of his Tilray outlook. And he's basing that on what?
Well, I mean, listen, Tilray, we've spoken about it plenty on your show. I mean, it's a little... it's out of place versus some of the other comparables that are trading in much better multiples in our view. And we've talked about it, I think, for the last year, whether that's CannTrust or OrganiGram, both of which we own, Village Farms even though that's getting a little nosebleed up here. Those are our Canadian plays. Tilray's just never really done it for us. But the bigger news, I think, today is the Harvest Health and Recreation takeover of Verano, creating the biggest U.S. multi-state operator, at least for today. So that, I think, is what's putting a focus on U.S. operators.
Huh. Okay, so give me the rundown on that. We haven't even looked at that today because we've been messing around in our YouTube studio in Toronto. Say that again. Harvest Cannabis took over who? Harvest
Health and Recreation. HARV is the ticker. They took over Verano, which was a privately held MSO, and now they have evidently the largest footprint in the U.S., overtaking, I believe it was acreage. But all moving parts, in our opinion, of sort of the FANGification of U.S. cannabis. We think out of all of these will emerge the 4 or 5 winners, the Facebook, Amazon, Netflix, Googles of the cannabis cycle for the U.S. players.
Wow. Great. So are you a buyer or holder of HARV or Verano?
We own Harvest. It's been one of our larger holdings. Certainly, we like to trade around our core positions. We had sold a little bit into the run-up at the beginning of the year. Very fortuitously bought some back last week and, maintaining our percentage weighting. But again, we look at these, as we say often, 3 to 5 year lens. So with a 3 to 5 year lens, we're trying to, make sure that we maintain our core and sort of navigate our way to the other side of what we foresee to be asymmetric opportunities for U.S. cannabis.
Sure. The proliferation of the CBD opportunity continues unabated here, especially in the U.S. with the passage of legislation recently making that federally permissible. It strikes me, Todd, that some of these CBD operations that are suddenly coming to market where, they're making some pretty big claims about being the biggest and ultimately the most profitable. It strikes me that the CBD market is going to be one of the first ones that's ripe for oversupply here, especially in the U.S. What's your take on that?
Well, I don't know about continuing unabated. The Department of Health across, United States, across the states, has made this very onerous for CBD brands, for particularly anybody that wants to use it as an ingredient in food or beverages. Paradoxically, that should benefit the existing players, Charlotte's, Elixinol, TGIF, all of which we have positions. As you know, we advise 1933 Industries, TGIF. But certainly, we think that the best days are ahead of these names, and it's going to be tough to want to roll out CBD brands. I mean, it's going to be everywhere. But to your point, you can't really make claims. I don't even know if you're allowed to call it CBD as opposed to full spectrum hemp oil. And certainly distribution is going to play a role there. But still very early innings. We talk to a lot of people, and most of the people we speak with just don't see sort of the value proposition for cannabis writ large.
Interesting. Todd, a lot of companies are sort of starting to position to spread to the U.S. in Canada, or rather to the Europe in Canada. And the perception is, whereas 3 months ago, the perception in Canada was, okay, the Canadian market's far more mature than the U.S. market, so let's all go and grab multi-state operators. Now the multi-state operator sort of model is a saturated playground. Arguably, now I know you're going to disagree with me there, but so there's at least in the Canadian investment space, it's kind of like people are saying, well, okay, so the U.S. place is a crowded playground now with a lot of U.S. operators. It's going to be harder to compete there. Let's go to Europe. And so I mean, I think it's all about gravitating towards the lowest hanging fruit. Do you see that Europe is becoming more attractive relative to U.S. operators at all? Or do you still see the U.S. multi-state operator as the ultimate playground for new money coming into the space?
I don't think you can be, there's any question. I think Beacon, our friends at Beacon Security said last week in one of their notes that U.S. multi-state operators are trading at a 69% discount to their comparable Canadian peers. So I don't know where this, where the crowded sandbox or the whatever the analogy was. We think that the MSOs are, certainly provide the best risk reward. If for no other reason, you think of the optionality that's going to be introduced when banking reform comes through. That alone gives you a pretty wide margin of error, in my opinion, on some of these multiples. And again, I was speaking with a reporter earlier who was making the valuation case on the MSOs versus last year's numbers, and that just doesn't make sense to us. We're looking at 2019, 2020 even in terms of what we see is relatively inexpensive ways to play this space, as much as I can say that with a straight face, given sort of what the numbers are right now. But it's going to take time, and I think that's sort of the opportunity, again, if you're looking with a 3 to 5 year lens. But, certainly don't think that first of all, you got the United Nations vote coming up. That all indications are they're going to push the reclassification of cannabis out to March 2020, which sort of aligns with the U.S. election, right? But the the World Health Organization has already recommended a rescheduling. As you know, they certainly sealed that, and by sealing it, I think gave them the cover to push this out one more year. But nonetheless, that's sort of the paradox for a lot of these international plays, and certainly puts the focus back on the U.S. opportunities, at least for us.
Interesting. What about the states that aren't really making moves towards legalization of cannabis? Like I'll call them let's call them the Bible Belt, for want of a better word. I mean, states that seem to, be resisting the trend. Do you think that they're ultimately going to have to jump on the bandwagon and, move the entire U.S. market more and more towards a national sort of legality?
I mean, listen, I don't think these genies are going back in the bottle, and particularly since we continue to learn more and more about, as we call it, the efficacious agility of cannabis. And this is not just a one-off for anxiety or for stress or for anger or anxiety or stress or for any of the maladies that sort of are being tossed around for cannabis right now. But certainly as we get into the clinical trials and start to understand more about how some of these compounds are reacting in indications such as cancer, brain cancer in particular, autism, Alzheimer's, and the such, I think that perception is going to take several years to kind of turn, I think, maybe sooner. But as people come to realize that cannabis is not about getting high, it's about getting well, and it's a lot of these cannabinoids are actually very therapeutic and good for you. That's an offside societally. So I think all of those states are going to come. Some might come sooner, some might come later, but they're all going to come because this, in our opinion, is going to morph into rough justice, $1 trillion plus industry in a good decade's time.
Okay, great. Do you have any new companies that are on your radar that maybe the rest of us haven't heard about? We have 3 to 5 year horizons on a lot of our names. So, the same names that we have been talking about for some time, whether that's GW Pharmaceuticals and obviously names like Village, as that starts to play out of the marketplace, Village Farms. We're pretty constant in our names. A new name that we recently added that we think is interesting is CB2 Insights. That's CBII on the Canadian exchange, and I'm certainly not going to make the case for the stock here, but we bought some recently, and it's probably worth doing some due diligence on. Real company, real revenues, just a new listing. Yeah, you bet. I've noticed that there's an increasing number. So CB2. Started off as an investment company that was deploying capital into some of the names that it liked, that it gravitated towards. And then it became an operator, which, that's kind of the path that was followed by MedMen, by Acreage Farms, by a whole bunch of companies. Is that business model still a viable one in your view in terms of newcomers to the market, or do you think that's a crowded sandbox?
Well, I think as with anything, it's a function of who the operators are and what the strategy is. This is a greenfield for new industry, and certainly there's going to be generational wealth, in our opinion. But most of the companies out there are probably going to fail. It's probably an analog to Y2K, the dot-com bubble and bust. We don't know who the Friendsters are versus the Facebooks versus the MySpaces, and if you don't know who Friendster or MySpace is, that's sort of the point. Right? We all know who Facebook is. Right. So, all of that has to be proven through. And like I said, most of the companies out there likely fail, but the ones that survive are going to just see all kinds of benefits, both for the company and for investors in those companies.
You bet. All right. That's great. Todd, thanks again for your input. We'll come back to you soon. Have a great day.
Thank you, James.